So it gives me great pleasure to introduce this lunchtime speaker. In my long career, I think the worst decisions that have caused dentists the biggest problems have never been clinical decisions, but financial decisions. And so we're very lucky to have on board Everest Wealth as a sponsor. And I'm very lucky to introduce today one of their speakers, Jarryd Gillmer, who's going to really talk about this important topic that I think for dentists, where we focus too much on our clinical life, that we really need help and guidance. So just to give a short background on Jarryd. Jarryd has been involved in venture capital investing and discretionary fund management since 2016, following his ambition to be a certified financial planner in the industry, a role which he has excelled with a wealth of knowledge, as well as a compassionate, warm approach towards investors. Jarryd is a welcomed and classic addition to the management team at Everest. So I'm not going to describe what Everest do. I'm going to hand over to Jarryd, and thank you so much for commitment and for your time that you've given us at SADA Conference 2021.
No, thank you, and thank you for such a warm introduction. I think you've actually hit the nail on the head of exactly what my introductory comments were going to be. But ladies and gentlemen, thank you for the opportunity for me to present to you what I believe is a very unique business in Everest Wealth. And I wanted to relay that I actually was privileged enough and extremely excited to be presenting to all delegates today, because first and foremost, I agree, the medical profession and the dental profession have a combination of professionals that tend to look at their business and their successful practice very similarly to the way they look at their investments. But what they sometimes forget is that although we focus on our business and creating a successful practice for our clients and good outcomes for our patients, it should be a balancing act. And the more successful our practice, we cannot forget about that conversion into our wealth journey, into creation of wealth, into growth of wealth, and ultimately a legacy that we want to leave behind. And what I'm very excited to do is to chat to you a bit about Everest's stance on this approach and how we believe we've identified a very unique, a very exclusive, and dare I say in many of my presentations, a very sleek and sexy alternative to the traditional investment world that many investors are used to or have become used to over the last decade or even 2 decades. So I thank you for your time, and I'd like to switch my camera off just for a moment to take you through a quick presentation. And I hope that all delegates will enjoy and at the very least find some new perspective on the fact that the investment world, although it has become more sophisticated, it does not mean it has to become more challenging. And at Everest Wealth, that's exactly the stance that we're trying to approach every investment decision with. So without further ado, I'd like to take you through a bit about my business. And the funniest thing is my mother actually was a practicing dentist for about 25 years before she retired. And it was the nicest element, and an element that I keep having when I engage with dental and medical professionals, this nuance of understanding that the investment world doesn't have to be complex. And I'm very appreciative of that fact and excited to take you guys through a little bit about Everest Wealth.
They say you can find it on top of the world, or maybe at the end of some winding trail, at the furthermost reaches of imagination. They say it's born in every one of us, and that if you listen closely enough, you'll hear it calling. Never sleeping, always dreaming, bit by bit, awakening the soul. They say It's the cradle of creative hearts, the mother of obsessive minds. It's curious and whimsical, and wild and wanting. It stands like change to the challenge. It favors the brave and creates legends of lowly men, heroes where once there was only hardship. That between its glorious folds, journeys are born into the great unknown, to where the human spirit defies gravity. It's a fleeting chance, a crazy punt, tenacity and tally-ho. The art of numbers, the master in the craft, the slave in perfection, the shoulder in a friend, the father in a nation. It, they say, is your true measure of wealth. Not in how much money you've earned, but in the legacy of a life well spent. That brilliant, beautiful thing called fortune.
Right, thank you very much. That was just a short video on Everest Wealth that we always like to start all our presentations with, just because the true belief that we have at Everest Wealth, and I think it's very similar to medical professionals when they deal with their patients, is that, you know, treating a patient and you know, treating an investor needs to be a journey. It shouldn't be an isolated event. To create wealth and to sustain wealth and to make it through the investment cycles and these crises like COVID-19 that we go through, you need someone that's going to partner with you and take you on that journey. And my focus for today's presentation is really to give all delegates a new perspective on the investment world and the fact that the investment world is much larger than many investors and even financial advisors realize. And today I want to take you through 4 main points, starting off with a little bit of an introduction into what are investments, I mean, in its simplistic form, before we discuss the traditional and non-traditional elements of those investments. What is an investment and what should an investor be looking for? So an investment in its simplest form is not a complex structure. And it's something that we pride ourselves in at Everest to demystify the fact that an investment is a complicated structure. Any investment, any fund manager, collective investment scheme manager, share portfolio manager, global, local, regardless of the sophistication, the core of an investment is to design an objective of a solution that can match a need that a client has or an investor has, and to design a risk and reward process to actually match that objective. And in the investment world, the way we as fund managers actually do that for clients, very similar to you when you make a decision in your personal life, whether to buy a car or not buy a car, whether to buy a holiday home or to rather, you know, pay for your child's education in advance. Investment is all decisions in terms of investing into what we call assets that the investment universe has on offer at any given time. And that is the simplicity of investment. But what we've seen in the investment world, and this is really especially over the last 5 years, is that the universe of investments has become a lot larger. And a lot of investors fall into the trap of still focusing on those traditional investments and that limited scope of the investment world. And those terms that you all would have heard, engaging with investment managers, engaging with your financial advisor. You know, are you investing into shares, bonds, cash, and property? We call it the 4 big asset classes in the industry. And the truth is that conversation no longer exists. That conversation is much broader, and the selection of choice of where we can deliver value for investors is much larger. But something very interesting that I wanted to show to everyone today is the fact that in South Africa specifically, we have an extremely regulated and robust financial service industry. It's really one of the industries where we are above the curve, even comparing to developed markets. But with that regulation, when you look at bigger fund management businesses, they fall into that trap of having to be regulated and being prescribed by government, by certain regulations in terms of where they can actually invest a client's capital. And when we look at those regulations, whether it be your retirement funding that you're trying to promote and grow, whether it be an investment such as a investment product on a platform like a Momentum or a Discovery, much of the focus has always been to invest locally through regulation. And the problem we are faced with is you have over 1,200 collective investment schemes, unit trusts, registered in South Africa. But you have 40 proper South African companies registered on our exchange to invest into. You have 25 to 35 proper listed in property investment companies. You only have one South African government being able to issue what we call bonds, and you have one regulation and treasury that sets the rates of interest and the returns that you'd get on cash. So you have all this choice of investment provider, but ultimately they're all investing into the same universe. So diversity, uniqueness, and that sexy alternative that Everest strives for becomes very difficult to find in your bigger investment management firms. And that's a bit of a message that I wanted to give to you today about the fact that when we are forced to make our investment universe smaller, we are also constricting the outcomes that our investment portfolio can provide. Something very interesting, and again focusing on the old traditional world of those main asset classes that we all hear about, is the fact that the investment world has also severely changed. And it's not just because of current crises such as COVID-19 or prior crises like dot-com bubbles and locally, Nennygate and people, firing presidents and all kinds of things. The truth is the relationship between how much value I can get from an investment compared to the actual risk that I take in the investment has become a lot broader, in the sense of I've got to take a lot more risk in the traditional space to get a smaller return. So that's a very odd relationship, and something that we believe at Everest is not a comfortable relationship to put investors into when designing their objectives. And the graphs on the screen quite clearly illustrate this, that when we look 10 years back, the blue mountain on the graph is the return that you received from investing into different types of investment structures. The red was the risk, which we define as volatility, meaning when you invest into something and that value changes on a daily basis, which investments do, by how much does that on average, that investment change? That is called its volatility. And you can see that the relationship over 10 years is very different to over 5, where the red mountain peak vastly consumes the blue. And in fact, the blue even reduces, meaning you're getting a lesser return for more risk in this traditional space. And Everest Wealth, it's again something that we agreed as a business we need to focus on in providing something to investors that doesn't fall into this trap, that doesn't fall into this conventional way of thinking of investments. Because if we think conventionally, we're only ever going to get that benchmark. We're only ever going to get that conventional return. Very interesting is, I think we've all heard that saying, it's not about time in the market or time in the market. It's about the time you spend in the market. And that sentiment couldn't be more true and never, becomes void, because ultimately it is. The biggest detriment any investor does is by chopping and changing investments. That is how they deteriorate their wealth. But again, the types of returns that you would see going back 10 years ago versus the types of returns over the last 5 years, you can clearly see things have flattened out in the traditional space. Investments have become less appealing and more difficult to make a proper informed decision. And it's no longer as simple as seeing your financial advisor and picking any 4 or 5, unit trust big portfolio managers and believing you're going to get a good outcome. Investment has become much more specialized, and we have to really consider how we design those objectives for our wealth journey. Okay, so I've spoken a little bit about traditional investments, but what do I mean by the non-traditional, and where does Everest focus? And to introduce the topic of alternatives, I want to introduce new terms to you, which is private equity, private debt, and unlisted securities. And on the next slides, I want to unpack that for you. And in the traditional investment world, when we looked at those asset classes, and specifically using the JSE equities as an example, many investors are aware that we have a stock exchange and we have companies that are listed on this exchange. We read about them in the news. We see the good and the bad and the ups and the downs that these companies have. But when we compare traditional versus non-traditional, all an exchange is when a company reaches a point that they want to exponentially grow. They list their ownership interests on an exchange, and in turn for listing, that gives public investors the opportunity to actually put capital into the business and make it grow. But the problem that we have when that happens is that the company itself, the value of that business, is no longer defined like you in your practice in terms of the revenue, the management of costs, and inevitably the profit that your business creates. It becomes more so about something we call sentiment, which is on any given day, if I took every delegate in this forum and I asked them to vote on whether they would invest into Naspers as a company in their investment portfolio, if every single delegate said no, and a million other delegates said no, Naspers share price would actually deteriorate in value because no one believes in that stock. But yet, does that mean Naspers doesn't perform and make a profit? Not necessarily. So sentiment is something that can both create value in a portfolio, and we've seen that, for instance, with COVID-19. If you were invested in the JSE and you invested just after COVID, you could have actually earned up to a 70% return in a number of months. It's unheard of. Yet, if you had invested just before COVID, you could have also made a negative 30% return. So there's that double-edged sword, there's that catch-22, that when you want to create very large wealth, you're going to take large risk. But when you want a defined outcome, private equity and private investment offers the ability to control the outcome a little bit better and control the business that you're investing into, as opposed to just being driven by what someone believes the value of a stock to be. And it's quite interesting, and I'd like to give an example actually of a stock, which is MTN. And I think it's the most appropriate example I could give. And what you'd see on the slide is, on the left are the actual audited financial statements of the MTN group. And you can very clearly see that as a business, MTN year on year has grown their revenue, has grown their customer base, has grown their after-tax profit, has grown the earnings that they give back to investors. So wow, what a phenomenal business. But yet, on the right-hand side, because of that thing called sentiment, in 2015, I think we all would have read about it, MTN started to get involved in this Nigerian debacle of whether or not they should be paying a fine and whether or not they were right and wrong in terms of certain Nigerian regulation. And that was a continuous battle. Eventually, there was a fine paid, but it was vastly reduced. And, it's actually now been forgotten. But yet, if you were an investor, even though MTN made profit year on year and increased its value, its stock value is still sitting on a negative at about negative 30%. So at Everest Wealth, we understand that there is a place for this type of world, this listed traditional investment. But when a client wants a more controlled objective, a more defined outcome for their investment, we believe that is a smart wealth journey that we can help contribute to. So I hope, if anything, I could leave you with this example and understanding of the types of investments that have come about and the type of unlisted non-traditional world that is far greater, that has hundreds upon hundreds of investment opportunities as opposed to just those limited stocks and companies that we might have on our stock exchange. So I think it's fantastic that I tell you about these new types of investments, but ultimately there still needs to be an investment strategy. We have this vastly greater world of private equity, private debt, and venture capital investments, the alternative space. But where do we focus as Everest and why? And I've deliberately put it on the screen to say that we focus on a word called franchise. And I just want to demystify that word for a moment, because I can promise you when I use this word, the first thing I believe that pops into delegates' minds are a Spur or a Wimpy, some form of food, fast food. And it's not the case. Franchise means intellectual property. It means a business that is established, or a concept that has been refined, that can be replicated and can be successfully replicated. That's what a franchise is. It's not just starting a new venture, it's replicating something that works. And fortunately in South Africa, that applies to all industries. It's in the medical space, it's in hospitality, it's in property, it is in food and beverage, it's in mining. This concept of intellectual property is so powerful, and that is a core focus of our investment strategy. Fantastic. That's a video that I really enjoy playing, because it gives potential investors, people trying to understand this world of unlisted alternative investments, it gives a strong indication of the diversity that exists, and the fact that, as I said, franchising is not just about food and beverage, but it's an intellectual property that is spread across all industries. And at Everest Wealth, we're quite proud of the portfolio that we've been able to build towards giving clients the defined outcomes and the backing of those controlled and defined outcomes. But A couple of interesting statistics actually on the franchising industry in South Africa is the franchising industry is probably becoming the biggest contributor to our GDP. So in a world of economic crisis, this is the type of sector that is always going to have growth and opportunity for further development.
That's all right. I'm repeating this afternoon's session, so I've seen his presentation, so I don't have to watch it. No, so I've
Sorry,
got,
I'm
like,
just
a lot
getting
of
a bit
time.
of
Once I've introduced him.
sorry, I'm just getting a bit of
No,
background
it's
noise.
fine. I'll
Apologies
be
for that.
ready, and then when he goes, I don't need to watch it. So I
The
have 2
estimated
hours.
turnover for the franchise industry is also a very interesting statistic. It shows you that the franchising industry grows and that intellectual property grows year on year on year. And we're waiting for the new statistics to officially be launched. But when we've engaged with the Franchising Association of South Africa, even during COVID, South Africans appreciate things that they know and that are tangible. And even during COVID, with measures of lockdown and having many, food and beverage franchises closed down, the entire industry as a whole has still continued to grow. So it's very powerful. Just as an example, I kind of already just mentioned that South Africans truly like franchise. They like something that they can trust, that they've utilized before, that they've gone to before. It's a trust relationship like a patient would have with their dentist. They don't want to go to a new dentist and have someone new with a new personality. They like and trust what they can appreciate and have experienced before. And South Africa, actually, compared to many countries, is the second biggest supporter of the franchising industry in their relevant economies. If we just have a quick look, a very phenomenal statistic and why we love franchising is franchising has continued to grow by about 18% per year, whereas the South African economy, which includes franchising as well as the entire basket of other industries, has grown by an average of 0.8% per year. So a vast different, growth strategy and growth projection. Something very interesting, and coming back to the example of traditional investments and the fact that listed investment companies that are very large and have a lot of capital invested in infrastructure in their economies, the biggest element of any business is, will I have clients, will I have patients, and will I generate revenue? And the amazing thing is that year on year, every study that is performed shows that an average South African earning 100,000 Rand a month, proper average, middle class South African, spends 56% of their income every single month into some form of intellectual property, some form of franchise. And that just shows you, and why Everest is quite fond of this as an alternative investment, that there's a resilience in any type of market, in any type of economy, in any type of crisis, that these type of assets will give our investors, narrowing the return for a level of risk substantially compared to the traditional space. And ladies and gentlemen, I'm very cognizant of time, and I actually bring you to the end of the presentation just before we go on to the Q&A that I'm very excited for, and I hope there's some burning questions that all of you want to ask. But as an end, how has this all come together? How has Everest investment approach and Everest strategy come together in terms of the actual output and return that we've given clients? And I wanted to end off with one last slide just to give a snapshot of what is our flagship portfolio and our flagship investment offering that we are extremely proud of. And I just wanted to end it off on that good note, which is our strategic income portfolio, focusing on extremely high yields for as little risk as possible for investors. And I'm proud to say that we've outperformed our peers, and we are going strong, and we are extremely proud of this portfolio. And that actually is a little bit about Everest Wealth. I thank you again, and I hope that I've, if anything, provided some new perspective for all delegates attending this year's forum. But from myself and from Everest Wealth, thank you again for the opportunity to present.
Thank you, Jarryd. That was a great presentation, and I think that come Monday morning, Everest Wealth phones will be ringing off the line with dentists wondering how to invest their money. Sadly, we run out of time. There is no time for Q&A. But please just make sure that Everest has supplied all the information that we have to get hold of you and anyone who works on your team, as I say, come Monday morning. So thanks a lot for that, and enjoy the rest of your day. Bye-bye.
Thank you. Have a good one. Thank you very much.